Why should the people in the Eurozone be concerned about this particular report?
Well, if we look at what is the structure of European banks, they have been able to improve their core capital ratios in a very difficult environment with negative interest rates and with weakening net income margins. However, non-performing loans in the Eurozone remained in 2019 at about 900 billion euros, which is very important. It's three times almost the percentage of non-performing loans to total assets of compared to, for example, US banks. But the problem that many banks find right now is that the biggest wave of insolvencies and non-performing loans may come actually from the growth markets in which they invested to diversify their activities, from Turkey, Mexico, Brazil, where weak commodity prices, the slowdown of the economy and the crisis itself, and the businesses that are suffering from the loss of exports may be coming to become the new problem in rising non-performing loans. So what we're thinking here is that the Eurozone banks may find themselves in a situation in which in 2021, the rise of non-performing loans in the growth markets, plus the rise in non-performing loans in the Eurozone itself, may create a financial problem.
Incredible. And why is the percentage so much higher in the EU than it is here in the States?
It's very interesting this. In the United States, usually non-performing loans are washed out of the balance sheet very quickly because banks tend to do mark to market. So what you have is very big losses at the beginning of a crisis, and then you have a diversified private economy in which hedge funds or private capital buys some of those loans quickly. In the Eurozone, particularly in Italy and in countries like France and also in Spain, what you have seen is that it's very, very difficult to get rid of non-performing loans. Additionally, banks value their loans at mark to value, not mark to market. Therefore, the write-off and the provisions against those loans are slower. That's why it was much slower a process than, for example, in the United States.
And what is the risk of what is the kind of the worst case scenario with this that you can see? Does this surprise you? Does this report this morning surprise you?
It does not necessarily surprise me. When we saw that banks were growing in countries like Turkey, Brazil, Mexico, etc., it was evident that if there was a downturn, those risks would come very quickly, no? Because they're very exposed to the commodity cycle, very exposed to the credit cycle, and very weak when there are changes to the trade balance of many of these countries. However, what I think is interesting here is that how quickly the improvement in core capital of European banks can come back to levels that can be a concern for the ECB, the European Central Bank, or for authorities. But I think that the biggest implication, and it's already evident, is that credit conditions are tightening massively despite huge injections of liquidity from the European central banks. Banks, in order to protect their assets and their financial situation, are lending less and being more stringent in terms of the conditions that they give to provide credit, despite the increase in the TLTROs and the targeted liquidity programs that the ECB has presented, etc. It's because they cannot continue to build in their portfolio loans that become riskier at the same time as they see that things are getting worse in both the growth markets and the Eurozone itself.
Do you think we have worse financial pain lined up for 2021 even?
Well, I think that one thing is inevitable, is that provisions will have to be larger than what consensus has in their numbers. Banks have been very, very weak in equity markets. European banks are suffering immensely, both from negative rates and the policy, despite their slow and gradual improvement of core capital. But provisions will have to be larger. And also, it is going to be very, very difficult for these banks to continue to strengthen their balance sheet and at the same time lend more and in more risky ways to the real economy in a slowdown of, as we are seeing right now, of both the services sector and the manufacturing sector in the Eurozone. So this is how you create sometimes a credit crunch. The credit crunch doesn't come because there's lack of liquidity from the ECB and because there's any problem. It's because the solvency ratios of existing loans in not just their core countries, but also their growth countries is eating up of their ability to improve or increase lending to the real economy. And when the real economy is at the same time weakening, the banks cannot increase their capital and at the same time lend more. They need to be much more prudent when it comes to lending. And that creates an inevitable credit crunch if provisions are not taken very, very quickly.
I think the word inevitable is very important. Sometimes it feels we're always just running away from it. Daniel, I really appreciate it. Thanks so much for your time.
Thank you very much. Have a good day.